we are helping to demonstrate how relatively easier it is to expand a company across different African regions. Many of our European investors thought it was not going to be possible. And the good news is Africa is not over-regulated. There is enabling regulation, especially in the fintech ecosystem. So there's been sandboxes in the big African tech centers and beyond. Although there's not a lot of capital from government, there's an understanding that entrepreneurism is a critical engine for economic development on the continent.
Hello, everyone. Welcome to another edition of the Sourcing Stack. Our guest today has spent her career at the intersection of technology, finance, governance, and venture capital across some of the world's most dynamic markets. Margaret O'Connor is chairperson of Launch Africa Ventures, one of Africa's most active early-stage venture funds, having backed more than 180 startups across 25 countries. Beyond Launch Africa, she serves as an independent director of Chrysalis Investments, which has invested in companies including Sterling Bank, Klarna, Graphcore, and the Brandtech Group. She also serves on the investment committee of 535 Ventures and has spent more than 3 decades working across fintech, digital banking, ad tech, venture capital, and public markets. Over the course of her career, Margaret had oversight of more than 100 technology-enabled businesses across nearly 30 countries, helping founders, investors, and boards navigate growth, governance, capital raising, exits, and increasingly the opportunities and challenges created by artificial intelligence and demographic change. Margaret, it's a pleasure to have you with us today on the Sourcing Stack.
Thanks for having me. Exciting to talk to you, Vinay.
Great. Now let's keep this conversation around the investment ecosystem itself, and also more about Launch Africa's thesis and your take on fintech and the next big changes AI is going to bring. Now, to start with, you've worked across venture capital, public markets, fintech, ad tech, and board leadership roles on 4 continents. Looking back, what major shifts have had the biggest impact on how innovation gets funded and scaled globally?
So Vinay, we had the opportunity to look at the development of tech ecosystems from the US to Europe to India, Southeast Asia, and Africa. And there are broadly very similar requirements in what makes a successful ecosystem. And what's interesting now in developing the African innovation ecosystem is we have the opportunity to accelerate the development of all of these different component parts. But there is very consistent requirements for what will make a successful ecosystem. And in Africa, the one thing that you don't have that you did have quite prominently in Europe is the active role of government in investing in the ecosystem. So in Africa, what you're seeing is before Launch Africa started, it was largely development finance institutions who were backing later stage venture capital. So sure bets for building the economy. Launch Africa was the first ever institutional VC that was 100% private capital. So that has really helped to accelerate the maturity of the African ecosystem, having venture capital and private equity partners and tech founders and family offices from around the world participating in our investor community and bringing global best practices from all the other ecosystems to the fore in Africa. So we're really privileged to have so much smart capital now active in Africa. And I guess one of the things we saw with the spike in investments around the world in 21, 22 was a bit of tourist VC investments in later stage companies, and that has dissipated in the current market environment.
Great journey, I must say. I think the intent was very clear to support the African startups at a very early stage. As you said, I think Africa was able to probably get some funding for the later stages, but the early stage backing was a challenge. Great journey.
And Vinay, if we could just clarify, so before Launch Africa started in 2020, for many African founders, it could take 5 to 7 years to go from friends and family round to an externally investor base, because there just isn't the risk capital available at scale. So Launch Africa serves like a really important role in the value chain creation. So we were fortunate to work with more than 80 incubators and accelerators from Cairo to Cape Town, Abidjan to Zimbabwe. So there's lots of organizations to get startups out of the garage, but then to actually get them humming. And when we invest at the seed stage, our goal is to help the companies 10x their annual recurring revenue before they raise a Series A, so that they don't have to dilute themselves too soon. And because of the scarcity of risk capital on the continent, before Launch Africa started, we were seeing founder dilution, so that when it came to private equity, these companies at Series B would be working for their investors. Like they were still, the co-founders weren't able to maintain that appropriate ownership stake. So it's, absolutely positive, transformative, so that entrepreneurs have both the financial and social incentives for job creation at scale.
Great. Now, Africa's venture ecosystem is entering a new phase, right? So Launch Africa recently began returning capital to LPs through a series of portfolio exits. For years, the African startup story was measured by funding rounds. Are we now entering a phase where liquidity, exits, and DPI matter more than fundraising headlines?
Absolutely. And that's not unique to Africa. DPI is the real mark of success in the investor ecosystem. I mentioned earlier that development finance institutions were the primary source of capital in the African venture capital system until Launch Africa came to market with an entirely private capital investor base. Our LPs demand commercial returns on investment. And the wonderful thing about the 400 now LPs in the Launch Africa investor community, a subset of them are rolling up their sleeves and working alongside Launch Africa, co-investing alongside us from the seed and follow-up rounds. And so they have both a financial and a relation capital incentive to ensure that the right follow-on investors are coming into the African ecosystem. And how Launch Africa has delivered its DPI in our first fund is partial sales and through secondaries. So we're getting the right follow-on investors. And it took us 2 years to educate both the entrepreneurs and some of the other investors on the cap table in our portfolio companies that by exiting in a secondary, we were not abandoning these companies. We were actually ensuring that they had follow-on capital from more deep-pocketed investors, some of whom would be able to fund them through, Series B, Series C rounds with the right expertise for the later stage companies. So just the mechanisms for exiting a company, the legal and financial mechanisms, as well as the people, making sure that the advisors and the follow-on investors who would then have board seats were the right people at the right time, and that investment capital was coming in at the right price. So there was a lot of both, people, legal, financial mechanisms and agreements that needed to be worked through so that everyone was feeling that, this is a healthy development. Launch Africa was the first VC on the continent to have a head of exits. So we were super fortunate. Kartik Sharma, our head of investments in Fund 1, then wanted to complete the cycle. And he's now the full-time dedicated person leading exits. So he knows these companies intimately from the initial DD now until the exit. So it's a beautiful loop.
Right. So just a follow-up question on the LPs side of it, like where the LPs are a little skeptic of the returns that they can earn through investing in VCs that are focused on investing in emerging markets like Africa?
It's fair to say that the majority of investors coming in to Launch Africa Fund 1, they viewed this as an adventure into the final frontier market. And everyone felt they had a lot to learn. They had a lot to offer, but a lot to learn. And I think we completely underpromised and over-delivered in Fund 1, because investors from, especially Europe, we have a very big investor base from Switzerland, Germany, France, and the UK. And for them to receive DPI in year 5.5 was that completely exceeded their expectations. There's a lot more work to do. And there's still, Africa is considered a black box by many investors. So we, Launch Africa, are very clear and consistent in our financial reporting. And it's incumbent upon the entrepreneurs who are in the Launch Africa entrepreneur community to understand that honest and transparent reporting about the progress of the company and sharing the inevitable obstacles that come up in trying to grow a company in the final frontier market. So by including our investors in the journey of these companies, both on an individual basis and aggregate, it's really helped many more, 400 LPs begin to understand what's happening across these different tech verticals and across the different geographic markets. And Vinay, one of the things that we did not anticipate when we launched a totally Pan-African fund was the amazing valuation uplift that was possible in an ecosystem like Francophone Africa, which had very little risk capital outside of French investors like Partic and AfriInvest. We've seen incredible talent, incredible community development across Francophone Africa, and now working with later stage investors, clearing the pathway for trade sales in this region that was the least understood of all the African regions. And it's super interesting to see a lot of in the Francophone region, entrepreneurs having been educated in France, go home to build really great companies with the great technical training they received in Europe. And some of them, still had relationships there. So we saw the single biggest African tech company exit from North Africa to Germany, BioNTech buying in at a very high valuation. So I think cross-border flows of capital between Africa and Europe will in the near term lead to some very attractively priced trade sales. And that's something we're working really hard at.
Great. Now, just to understand one of the biggest misconceptions about Africa, what do investors outside Africa still misunderstand most about the continent's startup ecosystem?
So As I think you know, in Africa, there are 4 big African tech hubs. That's Cairo, Lagos, Nairobi, and
Nairobi.
Cape Town. Yeah, Nairobi and Cape Town. So
Right.
there's slight variations in those ecosystems. And so there was and we are helping to demonstrate how relatively easier it is to expand a company across different African regions. Many of our European investors thought it was not going to be possible. And the good news is Africa is not over-regulated. There is enabling regulation, especially in the fintech ecosystem. So there's been sandboxes in the big African tech centers and beyond. So there is an understanding in government, although there's not a lot of capital from government, there's an understanding that entrepreneurism is a critical engine for economic development on the continent. So we've seen enabling regulatory environments across the continent, and we're going to see more collaboration between government regulators and the startup ecosystem, because these tech-enabled companies are making life better. They are providing access to credit for small and medium businesses and the informal economy, which is the engine of the African economy. And so that regulatory environment, we saw fintech, as I said, health tech in Rwanda. Rwanda is the first country to have a health tech innovation ecosystem that enables startups to work in the public health system. And we're confident that by sharing the best practices from Rwanda, some of the other African markets will, over time open up their public health systems to this low cost, high quality, smartphone enabled innovation systems. And I know you're interested in AI. We all believe that AI and education, so ed tech and future of work or HR tech, are 2 tech verticals which will be positively transformed with the use of AI. So it's, again, working with regulators to ensure an appropriate enabling environment for education systems as well.
Oh, that's a very great narrative. Now, scaling beyond founder-led businesses, what are the most common governance and leadership mistakes startups make as they transition from founder-led companies into scalable organizations?
Sure. So not all of the CEOs who got the company out of the garage and established product market fit are the right CEOs when the company needs to go to 100, 250 people and institutionalize. So it's helping founders understand what are their strengths and what are their interests, and if they are the right people to grow the company from 10 employees to 100 to 250, what skills are required, what board is required to complement their strengths. And when we've come across a situation when the founder who got the company out of the garage isn't the right person to grow the company beyond, how do we help that individual make a graceful exit, possibly staying on the board, but maybe going back to the garage to create another company, but helping founders on that journey of acquiring the right skills and experiences to grow an institution, and or to exit and go back to the garage, or to go to corporate, or whatever the right next step for them. But because the African ecosystem is only, we say 2010 marked kind of the beginning of venture capital in Africa. So it's a very nascent ecosystem to provide role models of founders who maybe made way for someone who's going to grow the company into a market-leading institution. We need to see examples of this, across different geographies.
Great. Now, let's talk about the fintech's next chapter. Fintech has dominated African venture capital for over a decade. Does it remain the continent's biggest opportunity, or are we beginning to see the next generation of sector emerge?
I'm going to answer that in two parts. So fintech, I believe, will dominate the biggest exits. So, there's a lot of appreciation of the financial value that can be achieved in fintech. So Launch Africa, actively has conversations about potential secondaries and trade sales across our fintech portfolio. So I think fintechs will drive the realizations in the DPI for the next 5 years. But in 2026, we're seeing definitely an increase across the African VC ecosystem in climate tech, agri-tech, and other verticals. All of that is possible when you have digital payment rails available to companies across different tech verticals. And Vinay, one of the things that we're not yet sure how to make it a reality, but across the world, ed tech and HR tech don't have the same valuation uplift that you see in fintech in all global ecosystems. And as we know, Africa is the youngest continent on the planet, and there's so much need for AI natives to have access to the right learning systems from an early age, and then when they're ready to enter the workforce, the right future of work solutions. And Launch Africa have been working with a specialist future of learning and fund for Africa to try and see, can we not increase the return on financial investment in these companies? But we looked a lot at the Indian ecosystem, and you just don't see that same level of valuation uplift in those sectors, but they're absolutely essential for economic productivity and making life measurably better in Africa to have this ed tech and future of work companies to support the majority of the population.
I think fintech still has its time running in the African continent. That's what it feels like. Now, AI, humanity, and responsible innovation. You've recently written and spoken about the broader implications of AI and what it means to remain human in an increasingly automated world. What conversations about AI do you think investors, founders, and policymakers are still not having enough of?
So it's a very complex area, and I was delighted when one of the Launch Africa investors made it incumbent upon me to read what Pope Leo had written about AI and humanity. And over the course of my career, I've helped to facilitate conversations between faith leaders, corporate CEOs, investors, and tech operators. So I'm very comfortable with the idea of public-private partnerships in thinking about the future of the economy. In many countries, that includes government leaders as well. And certainly, there's a lot of question marks about the future of AI regulation and what aspects of AI are appropriate to regulate. But as a working mother and family member, AI also impacts families, communities, as well as companies and countries. And I think is important for every person listening to your podcast, not just to think about how do I acquire the right abilities to manage 3 or more bots in my working life, but how do I want to use AI to stay healthy, and where do I want to draw the barriers? What parts of my life do I not want to go to an LLM to find the answer? Maybe I should go in nature. Maybe I should go for a quiet conversation with individuals or groups in my life. Right. And really to begin to draw healthy boundaries around where can AI make the most productive improvements in my life as a human, as well as a business leader. The conversations I've helped to facilitate in the Launch Africa investor community right now has been about sharing global best practices for AI in not just investor due diligence, but portfolio management and looking at the exit landscape. But it was taking a step back and
Great
just saying,
perspective.
okay, how do we use AI responsibly in our life? And one of the things that we were really fortunate to have a resource. So there's a woman at Cambridge University who in her past led an ethical African AI research institute at the University of Cape Town. So I mentioned him back in the UK at the end of June. And Rachel is one of the first people I will reconnect with, just to say, how do we have a formal process in Africa's biggest early stage tech fund for this query about ethical AI, the guardrails in our company, in our funds, and as leaders in the business community in Africa.
Right. Very well framed, Margaret. If we were sitting here in 2035, what would need to happen for Africa to have genuinely fulfilled its potential as one of the world's most important innovation ecosystems?
Vinay, I have had the great opportunity to go back to Visa and MasterCard global headquarters on my trip in the US. And one of the things that we were talking about was the development of African capital markets, or can we get any of the fintechs to an IPO? And by 2035, I would expect to see a handful of made in Africa for the world companies listing. In the first few years, I am anticipating this will happen in Abu Dhabi, Dubai, and Riyadh. And we have the first example of a company in Launch Africa Fund 2 called Move. Move is the fintech infrastructure for Waymo. So a lot of the revenue booked in the US, and they have moved their headquarters to Dubai. Autonomous mobility in the UAE is a national strategic pillar. So I would not be surprised if Move is one of those made in Africa for the world companies that potentially enjoys an IPO. Obviously, what comes with an IPO is really fierce analysis, but a lot of information in the public domain, and we just need to make this information and to provide comps for listed companies, so that they, comps for the region and comps globally. So right. I do believe, although there's very little conversation about IPOs in Africa, by 2035, I hope we have some made in Africa companies for the world listing, whether it's in the GCC, London Stock Exchange, New York. But we do need to see some of that liquidity. The other thing we need to see by 2035 is many more African pension funds investing in the VC and private equity ecosystem. In the African ecosystem, Endeavor, a global nonprofit, has been working consistently over the past decade to educate people in the pension system, both regulators and pension fund managers, about the opportunity for financial returns as well as economic development by investing in alternative assets. And the third thing that needs to happen by 2035 is many African multinationals as well as global multinationals operating in Africa paying appropriate valuations for trade sales. So, with exits, we just don't see African multinationals understanding and appropriately pricing the acquisitions that have been offered. So creating the right valuations for those trade sales. So those are the three things that I think need to happen to unlock much more risk capital, but also to narrow the African discount, because some of the companies in Africa that are raising Series B and Series C, they are narrowing that discount compared to their global comps, but we need to see that happen even earlier at Series A.
Wow, such an elaborate, such a thoughtful perspective that you had shared with us. Thank you so much. Now, closing question. You've spent your career connecting founders, investors, boards, and institutions across multiple continents. When you meet an entrepreneur for the first time, What gives you confidence that they are capable of building not just a successful company, but a company that can shape an ecosystem?
I am especially comforted when I meet an entrepreneur who knows something about the history and evolution of their tech sector and can
Right.
talk about why some of the current or emerging market leaders in their vertical, what they did right, and where there's an opportunity to plug a gap that they haven't yet filled. So I like thoughtful entrepreneurs who understand the history of their sector. It's not like an academic exercise, but learning from the mistakes of the past and clearly understanding value chain gaps. Obviously, there are some outlier entrepreneurs who are building companies that no one else could have dreamed of. And in the Launch Africa portfolio, certainly the first one that comes to mind is Spencer Horn at Fly Cloudline. So a green airship. And Spence was motivated by building something in the aerospace industry. But long before all the conversation about drones, which obviously now drone technology is at the forefront with the war, Spence, who is a South African who went to Harvard to study aerospace engineering, came home to Cape Town, to Stellenbosch, and built a green airship. This was not a Me Too technology, and there are many use cases for Fly Cloudline, both in oil and gas inspection, conservation inspection, deliveries for blood in remote areas where they've had, a crisis. Fly Cloudline was even flown to Mozambique when bad weather knocked down the telecoms mast. So this is incredibly innovative technology. Eric Schmitz from Google is a specialist in this space. He invested after Launch Africa. So, these sorts of outlier problem solvers who use technology in a very unique and innovative way aren't to be ignored. And obviously, our job is then to help them figure out, you have this breakthrough technology. Now, what are the right commercial use cases? And how do we support you with the right chief revenue officer and other people to support getting this to market at scale and, at the right price and representing your vision for this company. But, I really, for the most part, I like to see companies, founders who understand what's going on historically in their sector and how they're going to take it forward, maybe in ways that I could not have imagined until I met this individual.
Great. Now, Margaret, thank you so much for joining us on the Sourcing Stack. Today's discussion highlighted how Africa's venture ecosystem is entering a new chapter, one where the focus is increasingly shifting from funding announcements to sustainable value creation, liquidity, and long-term returns. We explored the realities of building across diverse markets, the importance of governance, the evolution of fintech, the opportunities emerging across the continent, and the broader focus of broader forces of AI and demographic change that will shape the next generation of innovation. One message came through clearly. Africa is no longer simply an emerging value story. It is becoming an increasingly mature ecosystem driven by exceptional founders, growing institutional participation, and a stronger focus on outcomes that matter to both entrepreneurs and investors. The future will belong to those who can combine ambition with execution, innovation with governance, and local insight with global relevance. Margaret, thank you for sharing your perspective and experience. And thank you, everyone listening to this podcast. We will see you in the next podcast very soon. Thank you.
Thanks. Have a great day.